Now that it's September, all eyes are on the Federal Reserve or the Fed. The overwhelming expectation is that they'll cut the federal funds rate at their upcoming meeting, driven primarily by recent signs that inflation is cooling and the job market is slowing down. I'm Nick Garcia with All City Real Estate, and in today's video, I want to talk to you about how the next Fed meeting and the meetings to come will impact the local Austin housing market. Mark Zandi, chief economist in Moody's Analytics, says the Fed is ready to cut as long as we don't get any inflation surprise between now and September, which we don't. He said this a month or two ago. But what does this mean for the Austin housing market, and more importantly for you as a potential home buyer or seller? So why a federal funds rate cut matters. The federal funds rate is one of the key factors that influences mortgage rates. Things like the economy, geopolitical uncertainty, and more also have an impact. When the Fed cuts the federal funds rate, it signals what's happening in the broader economy, and mortgage rates tend to respond favorably. While a single rate cut might not lead to a dramatic drop in mortgage rates, it could contribute to the gradual decline that's already happening. Just with the rumors of the last 2 months, the rates have gone from close to 7 to now about 6.4. Yesterday, they were in the 6.3s. So that means, or at least it's supposed to mean, that once the Fed kicks off a rate cutting cycle, we do expect mortgage rates will move somewhat lower, as we've seen in the past few weeks. And any upcoming federal funds rate cut likely won't be a one-time event. Historically, the rate cutting cycle is not one and done, similarly to the rate hiking cycle that we've experienced over the last year and a half or so. 6 to 8 rounds of rate cuts all through 2025 are looking more and more likely. So what's the projected impact on mortgage rates? Here's what experts in the industry for mortgage rates project for mortgage rates through 2025. One contributing factor to this ongoing gradual decline is the anticipated cuts from the Fed. This graph here shows the latest forecast from Fannie Mae, MBA, NAR, and Wells Fargo. So with recent improvements in inflation and signs of a cooling job market, a federal funds rate cut is very likely to a moderate decline in interest rates. And here are 2 big reasons why that's good news, maybe great news for both buyers and sellers in the Austin area. Number 1, it helps alleviate the lock-in effect. For current homeowners, lower mortgage rates could help ease the lock-in effect. That's where people feel stuck with their current home because today's rates are higher than when they locked in when they bought their current house. I'm experiencing the same thing. I'm at a high 2% interest at my current house. It would take a lot for me to go into a 6% interest rate. If the fear of losing your low rate mortgage and facing higher costs has kept you out of the market, a slight reduction in rates could make selling a bit more attractive again, because typically if you sell, you're going into buying again. However, this isn't expected to bring a flood of sellers to the market, as many homeowners still may be cautious about giving up their existing mortgage rate. Not to mention we have lots of inventory right now, so some sellers might say, you know what, I want to wait till we see more buyers coming out from the sidelines. And so number 2, what this means for you, it should boost buyer activity, just like I just mentioned. For potential home buyers, any drop in mortgage rates will provide a more inviting housing market. Lower mortgage rates can reduce the overall cost of ownership pretty significantly, making it more feasible for you if you've been waiting to make a move. So what should you do now? While a federal funds rate cut is not expected to lead to a drastically lower mortgage rates, it will contribute to the gradual decrease that's already happening. And while the anticipated rate cut represents a positive shift for the future of the housing market, it's more important to consider your options right now. Remember, timing the market is pretty much impossible. If you're always waiting for perfect market conditions, you're going to be waiting forever. Buy now only if it is a great idea for you. The expected federal funds rate cut, driven by improving inflation and slower job growth, is likely to have a positive, albeit gradual, impact on mortgage rates. That could help unlock opportunities for you, whether you're buying or selling. When you're ready, connect with me for any questions about the current state of the market. Remember, real estate, especially in the Austin area, is very hyper-local. One neighborhood is drastically different than another one. Thanks so much for watching this video. If you're a buyer, then I have a great book for you, Home Buyers Guide, that I wrote here. If you're a seller, I have another great book, How to Sell Homes Fast. If you want both of them, just send me a comment below and we can exchange messages. You can tell me where to send it. Thanks so much.